So traders, we're going to be looking at the stock market today, and I want to talk to you about why it's not over, but we are just getting started. Plus also, I want to share something that I'm seeing with gold right now as well too. There's a pattern that I really want to share with you because we're in a bit of a do or die situation right now. And also, lastly, I want to share with you the gold mining stocks and also the silver mining stocks indices, GDXJ, GDX, SILJ, SIL, because there's something amazing that's happening when it comes to gaps and where we are in the gap sequence and what that actually means. Are we at the end of this bear move on the downside, or are we just getting started? I want to share that with you, so let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it. Now let's have a look at the Dow Jones. Now guys, I gotta say, did everyone get the gift? The gift, right? So, if you guys are brand new to my channel, well, welcome. My name is John Howell. I've been trading the markets now for 16 years. My first 5 years, I lost $250,000 doing everything wrong that you're probably doing right now when it comes to trading the markets. And then after that, I got my shit sorted by getting slapped in the face by two 7-figure traders. And for the last 10 years, I've made a full-time income from trading. And now I just run a small group of private traders. And I help them as well, share them with what I know about the market. So welcome to my channel. If you like it, subscribe. I guarantee you're going to get a lot more information out of this channel than most other channels out there. This is not just news. This is information that will help you become a much better trader. Not just, let's just read an article about what has happened, because that's old news. All right. Now, let's have a look here. So a couple of days ago, market was tumbling off the cliff, right? And we were tumbling off the cliff, and as you can see, the market came down, and we started, guess what? We started seeing all the bumblebees, right? And your mate, Harry Dent, I guarantee he'll be like, oh, it's starting, here we go. My 90 years, my sun's spot cycle is, woo! I'm cracking myself up here, anyway. Oh God, I love trading. All right. Sunset spot. Anyway, the moon and the sun and the skies. So we had a bit of a drop to the downside, and I came out this day right here, and I said, guess what, guys? This is a gift. This is a gift. Get a gift. I don't know if it's going to be the bottom or not, but we're probably going to get a turning point real soon, and we're probably going to make our way back up again. So I'm seeing, and then I said on this day right here, a couple of days ago, I said there's two things that are happening on this day right here. This day right here. There's two things that are happening this day. One, people are selling out of the market because they feel the market's going to continue to crash. And secondly, there's people now shorting the market because they think that the top's in and the market's about to see a free fall. Now, we may continue seeing that free fall, right? But guess what? If the market's in an upward trend, you don't fight that. So trying to sell the market because you think the market's going to crash, fear, right? Trying to pick a top, wrong. What's the better solution? Just buy the dip. Whenever people say, buy, yes, John, but there's a time where buy the dip doesn't work. Do you realize what you just said there? Yes. 10% of the time when you buy it, it's not going to work and the market's going to continue down. But if you're in a bull market, by using simple moving averages, if you're in a bull market and we get a dip, guess what? Yeah, that dip could be quite a nice thing to, look at. Anyway, so we had that there, and we've had the rally now, and we've had a continuation of the move to the upside. And as you can see, and this is where the market tricks you. The market tricks you, and this is where you need to be looking behind the scenes of what this market is always telling you. Because whenever we get big movement on the downside, especially in a big booming market like we are now, guess what? That's now that to me, and that's what the market does. It shakes the weak hands out before it goes up. And not only does it shake the weak hands, the weak hands are getting stopped out here, or they're getting out because they feel the market's going to crash. Then the people that are fearful of missing out, they're going to jump in and short the market here because they think the market's going to continue to go down. And then the market continues to reverse on them and continues doing what? Continues to be in a beautiful upward trend. Same for the S&P 500, right? Look at this here. Just a beautiful upward trend. And all the S&P 500 did was just have a pullback down to the support line. And this day right here, I was saying, this is a gift, this is a gift, this is a gift, gift. And all the market did, just in a beautiful upward trend, have a pullback, and then we're ready to go again. Gap close, continue making a move up, and then away we go, right? Away we go for a move up. And obviously the Nasdaq as well too. Beautiful pullback to support level. This resistance in the Nasdaq 14,200 is now becoming support. Very nice support level. We had a drop to the downside, a bit of a gap down, and now we're actually completely moving to the upside. So what I'm seeing here, guys, when it comes to the Nasdaq, I see, and I still see to this day, that by the end of this year, by the ding, ding, ding on the 31st of December this year, and hopefully things have gone back to normal, and this thing has just gone away. What a lot of bollocks that is. Anyway, don't get me started on that. 17,000 is where I see the Nasdaq going. I'm actually in the QQQ myself, guys. And the good thing about the QQQ is the QQQ has actually held up a lot stronger. Notice the Nasdaq actually broke out, came back down to the support level, but the QQQ actually ran up and then held itself. So I actually see on the QQQs, I actually see a $410 target. Now, I'm actually in the QQQs myself, and the same for the S&P 500. The S&P 500, I see a 5,000 print coming by the end of the year. Now, this is not guaranteed, guys, but I see a 5,000 print coming by the end of the year. So we'll continue this very big bull move in the markets. And so, therefore, that's the reason why I'm actually in the SPY right now myself. And also, I actually have a target on the SPY. A first target would be around 500. That'll be my sort of first target that I see up there around the 500 level. But I believe we're likely to overshoot that because of the move that's coming. And then I believe we're likely to see a $540 print on the SPY. Or if we go use the S&P 500, that's a 5,400. Or I just see a minimum target there being 5,000 once again. Sort of equates to the 500 or the 540 on the SPY. And so that's what I'm seeing there right now, guys. So I just see with the environment in right now, people trying to short the market, wrong. People fearful that this market's going to turn over. Now, it may turn over, right? I may be completely wrong on what I'm saying here right now, and the market may just be getting ready to roll over here and dip to the downside. If the market does change its mind, we need to be flexible and remember that and mold with that. And until we stop making these highs at higher lows, the market is in an upward trend. So don't fight it. And all this was a pullback, gets people freaked out. And then the market continues up again. So let's have a look here now. Let's have a look at gold here. And one of the things of gold right now, guys, I've been saying that this on the gold daily chart, we could be getting one big massive sort of, this could be a shoulder here, a big massive head, and this could be a shoulder, right? I'm not saying it is a head and shoulder yet, guys. It just looks like one. I need to let the market tell me if it's going to confirm or not. I'm not saying we're definitely going to run to the upside because I don't know. We're in a no man's land. I don't know where it's going to go. I don't know if we're going to drop to the downside or we're going to continue up. But here's what I am saying. If I start to get a bit more confirmation that this is going to be a right shoulder, if I start to see something like this and we start to rally back above this 1900 level, that's when I say this head and shoulder formation is likely to come into play. And once again, how you do that is this, right? So if you look at this head and shoulder formation here. All right. So if I do this head and shoulder, if you look at this head and shoulder formation, look what we have here, right? So we have this that'll be the neckline, and then we have the shoulder, we have the head, and we have the shoulder. So what you do is then you just simply measure from the head to the neckline, from there to there, something like that, right? Then you project that up, maybe something like that there, right? You project that up like that, and then you move this up from here to here. And it looks like it actually looks like it might be a bit higher, or you may project that down a bit more. Yeah, so roughly around that 2,100, maybe a little bit higher, is where we're probably likely to go to, which is just a slight above new highs here. So that's what I really just wanted to sort of make that very, very, very clear with gold, guys. I don't know if gold's going to go up right now. Now, over the next few years, I believe we would have experienced a big bull market, but I don't know when that's going to start. We may have already started. Okay, so just be mindful of that. That a head and shoulder is not a head and shoulder until it's completed. And what I mean by completed is that we may get, and I see a lot of the times in the markets, we have a shoulder, then we get the head, and then we get the shoulder again. And then guess what? It doesn't, this looks like a head and shoulder, right? Just because it's a head and shoulder formation here doesn't mean it's going to be completed, and it doesn't mean we're going to go down. Because a completed simply means we actually break the neckline here, okay? We actually break the neckline. A lot of the times, it'll actually break the neckline just a little bit, give you a little false breakdown or breakout, a little false breakdown, come back up, and then start to move up. I see a lot of these head and shoulder formations being continuation patterns. So this shoulder, head, shoulder formation we're getting right now just simply might be a continuation for more downside. Like I don't know. I'm actually bullish gold right now. I'm in gold right now. So I'm raving for the bulls, but I can't. I'm just reading what the market's telling me. So that's what I'm seeing through there, guys, when it comes to the good old gold. And then also, last but least, I want to share with you something here that I'm noticing on the markets. With the markets, the market likes to there's in the markets, there's 3 different types of gaps that we see in the markets. All right. So the first one we see is what we saw, the breakaway gap. And a breakaway gap is normally at the start of a move, right? So we get a breakaway gap and then the market generally runs, right? That's breaking away from, and it's generally a bit of a pullback or a sideways phase. Then number 2, right? We have a breakaway gap and then we have like a continuation gap. So the market is broken away, the market's starting to go for a run. Then we have another gap and that's like a continuation. It's continuing that move. And then the market may continue in that direction for a while, either up or down. And then right at the very end, we have this, what we call exhaustion gap, where the market just, that one last, right? That's like that one last rep at the gym. Or, like today, just before doing this recording, I did an 8K run. And probably for the last, I'd have to say, maybe 400 meters. Probably 200 meters. I just sprinted as hard as I could. And all I kept saying was faster, 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 until I actually just got home, right? I did around the block. So that was me just exhausting myself right at the very end. And this exhaustion gap is right at the very end, and then it stops. So you don't always get these in sequences, but a lot of the times you can. And so if I use this breakaway gap, continuation gap, and exhaustion gap, guess what I see here? I see it happening on the mining stocks across the board. Look at this here. We have what? This here is a gap. So this one here was the gap before the move down, right? So this would be a breakaway gap here. So it's breaking away. It's starting to move down. Then we have another gap here. Remember I said before, then this would be what? A continuation gap where the market's continuing in that direction. And then we came down, and then look, we had another gap here, didn't we? And that would be what? I would say that'd be an exhaustion gap. So therefore, if this is an exhaustion gap, we would see a break above this level here, because that was the last support level there. Support. You'll want to see this thing get back above. If we do start to get back above here like this is going to be what I call an end of trend move, because we have just exhausted ourselves. And then I believe we're likely to come back up and start to fill at least this gap here, which is right there. So we need to see what happens over the next couple of days. If we do start to get back above this support level here, this is what I call the end of trend move. And that's also going inside with the exhaustion gap. Let's actually go look at the GDX itself, right? The GDX is doing what? We have the first bit here, breakaway gap, market moves down, continuation gap, moves down, sideways, and then a little gap here. Guess what that is? Possibly an exhaustion gap. Let's actually go to the silver mining stocks. We'll actually start with the junior stocks. They all did the same thing, right? Look at this here. We had what? We had a gap here, breakaway gap before the market ran down. Then we had a continuation gap, and then we had what? An exhaustion gap through there. So, and so we're seeing that through there. And then also the SIL as well too. Same sort of thing. We had the breakaway gap right here. we had the continuation gap, and then we also had the exhaustion gap as well too. So there we go, guys. I hope that this sort of helps you out when it comes to gaps in the markets. Guys, if you made it this far, then put a comment in the chat box below, gappity gap. Put gappity gap in the chat box below, in the comment section below. That shows me that you're a 3%er, because only probably about 5 or 10% of people really finish these videos. So that shows me that you're part of the top 3% who actually do want to make a difference in their life. And then also, it's going to confuse the hell out of everyone else that actually watches this. So put gappity gap in the comment section below, and it's going to confuse the hell out of everyone. Hope this helps you out today, guys, and I'll see you real soon. Hey traders, I'm giving away 100% free access to my brand new breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.